Hello, good evening, depending on where you are from. Here my time is night. This is 9:18 p.m. So I am about to walk you through what I have marked last. So this was the place I marked. This was the range, if you could remember, in my previous video. If you have watched it, if you have not, you can go back and watch it. So this was the range I marked that I would like to see market cover. So from that high, from this high to this low, so this is where I was expecting the market to come and cover. So you see the market came and took this out. We call it turtle soup. So we call it turtle soup, right? Turtle soup. All right, so this is what we call turtle soup. All right, so this is the CRT high, this is the CRT low, candle range theory. So this is what we will be working to. So what we'll be looking for is a way to sell into from this high to sell down to this place. So I'll be walking you down from the higher time frame, which is the weekly time frame, to the daily time frame. This is GBP/USD weekly chart. So I'll be dropping down to daily chart to let you see the opportunities we had in the market. All right, so this is actually important. Let me change the markup for clarity's sake. All right, so this is it. This is the law which today hits beautifully into it. So it's very important if you kind of see. And so you see, even on the daily time frame, we had a range to work out with. So this strategy is actually very important. It's very precise, very accurate, and very concise. So, and as you see, we had that. We also have this one here. So these are all. This one is called KOD. This one is called KOD, right? It's called KOD. I will explain that. This is the TS, and still this one too is TS before the coming down. So this is the weekly range high, then this is the weekly range low. So as we know, this is what we will all be looking for. So what are we going to look out for? We'll look out for sell from this place down to this place, because we have marked out price has taken out liquidity, and then price will be coming down, will be dropping down from that place. So and also, as you know, in the daily time frame, it also has another range which we will be working with, right? So this is the range now. So you see, consecutively price came down from this. It took like 1, 2, 3, 4 days to cover the daily range, and then it took another 1, 2, 3, 4 days to close the other range. So tomorrow is Friday, and what we'll be expecting the market, we will delve down into it, and then we will set our prediction and see if the market will go according to our direction. All right, so I told you, if you have not watched the video, I have done a video covering this range. So you see the market beautifully drop into it, and then you know why the market has tapped into this. Okay, it's very important when you have knowledge. I told us every day, I told us, let's say earlier, that knowledge gives you clarity, and clarity gives you confidence. All right, clarity gives you confidence. When you are so clear about what you are looking for in the market, it will give you confidence. All right, and most especially that thing that you are looking for has happened over and over and over again. It will give you more confidence, and that confidence at least will help you much more. If you will know this thing I'm about to tell you, you will be much more improved beyond the last place you were. So please stay tuned. I promise you, it's going to get better. I tell you, do not stop learning. Do not stop learning. Okay, it's very important when you get to understand this, right? So this is it. Okay, let's drop to 4-hour time frame. Then you will see what the market has been given. So you see, this is what we have on the 4-hour time frame, and we will be using the 4-hour time frame so much more importantly when we are coming to check our directional bias. All right, because we have already know the directional bias from the higher time frame, then our entries will be very, very noticeable on the 4-hour time frame. The 4-hour time frame will help us understand much more which candle we will be placing our sell or our buy from. Not actually entering from the 4-hour, but yet I have also developed a way of navigating the market through this chart, right? So through the 4-hour chart, I mean. So if you see, before any big impulsive move, so let me quickly mark out this. You see, there is a high here. I'm coming. There is a high here that the market took before going down the same spot. So the market also took some bunch of highs here before going down. So this is very important. Okay, it's very, very important for you to note that, and it's very, very important for you to keep that at the back of mind before it happens. Right? So, and as you know, that day we took out this low and the market retraced, push up back. This is a major retracement, and then plunge down, continue to go down. So it's very important if you will note that. All right, so what are we expecting right now? So what we will be expecting is to see how price react to those places before going down. What does market look for before it go down? What does market tap into? Where does market tap into before going down? All right, so we'll be talking about it today in this video. Excuse me. So we're talking about it in this video, and you'll see how precise this is. So actually I dropped down to 15 minutes, but for the sake of this video I'll be using the 30 minute as well. So I'm telling you, I didn't actually look at this chart, so I didn't actually look at it before teaching, so I'm just dropping into it. Yeah, just because I know what I did and I know what opportunities I had in the market, so it's very, very important. It's just very simple for me to navigate. All right, permit my language. All right, so this is it. This is what we mostly will be looking for. So you see, when the market dropped from that place, when it shifted the structure, so sometimes the market don't retrace back to that to the other block you had here to continue to go down. Sometimes it doesn't, sometimes it does. it is what it is. It depends on what's made the market push down or push up. So, and as we know, any low we take the market from the market is a breaker block. Yep. And I want us to understand a pattern that the market normally you need to know about the market, and that you should learn from that. All right. Sometimes I like that. All right. So this is your TS, total soup. This is your break of market structure, right? Let me change it to these dots. This is your break of market structure, and then this is your inducement liquidity, and then this is the pullback you have to sell from or to buy from. All right, so this is the pattern that you should work with, and that it consistently repeat itself in the market. This is the pattern you should use, and this is also it's just the same thing here. It's just the same thing that I'm about to reveal to you here. It's very, very important when you know that. All right. So this is it. You need to understand that inducement liquidity is the first pullback after a break of structure or before a break of structure. Sometimes the break of structure is not complete. Sometimes it comes like this, and then it breaks the structure here. So it's still almost the same thing. It's just the low before the break of structure or after a break of structure. So it's almost the same thing. So that is it. It just has some patterns that we need to go deep into, but not for this. This is just for public consumption. All right. So this is it. If you notice something, before price drops, price takes out a high or takes out a low before pushing, right? So now look at this place. Sorry. Now look at this place. Price had a high which is like this. So you see it has a high which the market took out, and then a break of structure here, right? And then an inducement liquidity here, and then you see, and then the market came and took the inducement liquidity and then continued to go down, right? So that is very important. And then you target the low, let's just say, yeah, then your SL should cover the high, right? And then that is it. So normally it's not just random theory. Is you have a point of interest, which is another block here, and then you have a fair value gap for the SMC traders. So these are the institutional reference point that you should look to have in place. Sometimes it's breaker block, yeah, sometimes it's breaker block, sometimes it's not, sometimes it's something else. All right, so those are the point of interest you need to find in place for you to push the button sometimes. All right, so, and I need you to understand that it does not always happen. All right, it does not always happen. So you see, there is a break of structure here, right? There is a break of structure here, and there is an inducement liquidity here, which didn't happen too quickly, but it happened here with these highs here. Alright, so and as it happens with these highs, you see this one sweep it and went down, take the high that produced it. So that was for a buy which I drew earlier. So this is for a sell. Alright, should I even, sometimes I find difficulty in drawing these things. Okay, right. Wow, what am I even doing? What the, sorry. Okay, let me draw it well. Okay, should I say these? Alright, yeah, that is it. Pardon my drawing. So this is it. It's actually important. This is your inducement liquidity. This is your breakup structure, right? Structure ship or church, anyone you call. So this is a liquidity this is a liquidity wipe before the push down. So that is it. This is it, and this is your inducement liquidity and your POI, your point of interest, raised above your liquidity. That your POI, which is your order block, your fair value gap, your breaker block, whatever. You see this place, it uses the breaker block here, right? It uses the breaker block and the fair value gap above it. So you see the same thing, the same markup here. So right, you see the same markup. It has a high and a low, and then a higher high, and then a lower low, right? And then an inducement, and then the market took it out and continued to drop. So that is how it is, right? So it's very, very simple whenever you have that understanding in mind. So this will be for the video, and I just want to keep it more simple, more clear. Then we'll delve much more into the rest to let you know that it's just the same thing, the same repeated thing that happened in the market that brings profitability. All right, thank you very much, and I will see you in the next one. Bye.